Thank you, Margaret. Good evening, everyone, and a warm welcome to our post-earnings conference call for the quarter and the year ended March 31st, 2019. I have with me on call Mr. Vijay Kumar, our CFO, and Stellar IR Advisors, our Investor Relations Advisor. We hope that you all have received our Q4 FY19 investor presentation and have gone through the same. We have also uploaded it on the stock exchanges and the company's website for your reference. Before I begin discussing the financial performance, allow me to give you a broad overview of the year gone by. As also mentioned on the last Concall, a little over 75% of our business is driven by the United States, where the winter has been harsher and longer than normal for the past 2 consecutive years now. This led to a muted consumption and consequently piling up of inventories at the customer's end in the USA. This, coupled with overproduction in supplier markets like India, led to a correction in shrimp prices which began from January 2018 and continued for most part of calendar year 2018. On an average, the price correction has been to the extent of 15 to 18% year on year in fiscal year 2019. Consequently, the lower prices dampened shrimp production in India, leading to a mismatch in the demand-supply situation for certain sizes, thereby causing order fulfillment times for some of our orders to get drawn out. However, the shrimp production anticipated to be lower this fiscal than in financial year FY19. We expect the situation to correct in the near future. Meanwhile, we continue to put in our best efforts to optimally utilize our capacities by foraying into new markets like China and also by working on developing value-added products for our existing customers in existing markets. Going forward, we believe that our value-added focused product portfolio and upcoming capacity for ready-to-eat products would help in enhancing the company's performance. Apart from the aforementioned, the relatively volatile foreign exchange rate in the past fiscal also had an impact on our profitability on account of working capital facilities obtained during the year, which were predominantly in foreign currency. Now I would like to share updates on our capacity expansion. The new processing plant at G. Ragampet, which will have an installed capacity of 20,000 metric tons per annum. The work has almost been completed. The equipment had been installed and cabling work along with the control wiring is being presently done. Certain civil works pertaining to non-technical areas which were delayed earlier are also progressing well. We expect and are looking forward to inaugurating the plant towards the end of the current quarter, that is Q1 FY20. As for the capex incurred, the total planned outlay of almost 90 crores has been fully utilized. Secondly, on our new hatcheries, we have invested in 2 new hatcheries, one at Srikakulam district, northeastern side of Andhra Pradesh, and the second one near Ongole, which is on the southern side of Andhra Pradesh. We have received the audit approvals and expect to start the commercial production soon. With these 2 new hatcheries coming online, the total breeding capacity stands at 1.2 to 1.4 billion specific pathogen free seed, depending upon the number of cycles being run. That is largely on the business updates from us. Now, our CFO, Mr. Vijay Kumar, will explain the financial performance for the quarter and the year ended March 2019, post which we will be happy to take the question and answer session.
Good evening, everybody. I am here to presenting you the highlights of the last quarter and full year ended March 2019. We will begin with financial year 19 key highlights. The company reported total income, including net revenue and other income, at rupees 896.2 crores as against rupees 1018.5 crores in the last fiscal. The volumes sold stood at 13051 metric tons when compared to 14146 metric tons in full year FY18. The average realization was rupees 687 per kg in FY19 versus rupees 720 per kg in FY18, a drop of 5% year on year. At the EBITDA level, the company reported a profit of rupees 111.1 crores as compared with rupees 129.9 crores in the last fiscal. The absolute EBITDA was lower by 14% year-on-year, and the EBITDA margin came in at 12.4% in FY19 versus 12.8% in FY18. Profit after tax stood at rupees 60.8 crores as compared with rupees 79.1 crores in the last fiscal, a drop of 23% year-on-year. PAT margin came in at 6.8% in FY19 versus 7.8% in FY18. The board has recommended a final dividend of 20% of face value, that is rupees 2 per equity share in FY19. Now coming to Q4 FY19 key highlights. The company reported total income, including net revenue and other income, at rupees 167 crores as against 206 crores in the same period of last fiscal. The volume sold stood at 2616 MT when compared to 3006 MT in Q4 FY18. The average realization was rupees 638 per kg versus rupees 685 per kg in Q4 FY18. At the EBITDA level, the company reported rupees 17.6 crores as compared with rupees 27.9 crores in the same period of last fiscal. EBITDA margin contracted to 10.5% in Q4 FY19 versus 13.5% in Q4 FY18, which included a one-time gain of rupees 5.6 crores on account of change in accounting policy for MEIS. Profit after tax stood at rupees 8.4 crores as compared with rupees 17.5 crores in the same period of last fiscal. PAT margin stood at 5% versus 8.5% in Q4 of last fiscal, also benefited from the aforesaid gain. Going forward, we expect demand to improve and our capacities to continue to be optimally utilized. We continually strive to reduce our costs through backward integration and enhance our product offering to customers via value addition, thereby improving profitability of the business. That is all from our side. I would now request the moderator to open the call for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking your question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who would like to ask a question, please press star and 1 at this time. The first question is from the line of Praveen Sahay from Edelweiss. Please go ahead.
Yeah, hi sir. Thank you for taking my question. Firstly, for this quarter, how much is the volume?
For this quarter alone, the volume one. Yeah, that was 3,000. That was total volume was 2,615 metric tons.
Okay, and like as you had mentioned that the 5% realization drop for an entire year. So
yeah.
So the currently in the first quarter, how is that as compared to the average of last year? Is there any improvement or at the same level we are finding it?
Good question. As you have noted, even in our opening remarks regarding the market situations which were affected primarily, of course, one of the reasons being the supply. Because of the significant correction in the pricing last year, that had impacted the farm level pricing also, which thereby also have had an impact on the farmers' stocking plans. Since the supply also is kind of constrained in the first quarter as far as the volume is concerned. And of course, there's a mismatch in sizes. Now the demand which is there has been increasing, and the unit value per kg has been increasing in the past 1 month. Slowly it's been moving up. It's been firming up, to be precise. It's no longer, it's moved from stable to firm, to be precise. The unit value has been increasing in the past 1 month. That is more because of the drop in supply, and the demand still continues. Whatever is the regular demand, that is still continuing.
Okay, so due to a demand-supply mismatch, the prices are improving. Can you give a number to that?
I would just give you, roughly it is around 40 cents per kg, US. Okay. So far, what we have noticed is around 40 cents per kg. But that is again, it's an average. Since you asked for a number, it's an average number based on many sizes and different products which are involved.
And can you give some color on the farm gate prices? How is that going?
The farm gate prices have also moved up by almost 20 to 25 rupees, especially, comparatively, if we look at it, when we compare this to last year, now the farm gate prices also have moved up. Of course, there was one reason is there is more demand at the supply source, at the origin in India. That is one point. The other point is, since the overall supply is also now lesser when compared to last year in this period, the raw material and because of the improvement in the sales price, overseas selling price, the raw material price also has improved. That is also gained at almost around 20 rupees, I think, 20 to 30 rupees.
Okay. And also, if you can give some, number to the, as you had mentioned, there is a mismatch in the demand and supply, and as the farmers has gone away from the, cultivation due to the price correction last year. So how much of percentage terms from the last year to this year the acreage has got affected in the country?
We wouldn't be actually able to put a number to the extent of acreage which is affected, because by now you would understand the sector also it has got to do with various permutations and combinations of the sizing which they harvest and the tonnage which they do per crop and the number of crops they are actually able to do. I will also correct your remark where you said that the farmers they have not totally moved away. They have actually put a pause. Like they have extended, for example, if they would have been stocking typically in April month, they have actually stretched it to May and June. So that is the point. So they have actually extended their position of stocking. So overall, in the total tonnage, we expect at least a minimum of around, on the whole countrywide, we look in the current year, for now, as of now, based on the situation now, we should still wait to see how the second crop progresses, how the stockings happen. But as of now, we estimate approximately around minimum of 100,000 metric tons across the country could be impacted. That is one way is also good, because that also enhances the pricing for the demand which is there. Because the whole concept also, as I mentioned, the supply is the key part. One of the excess supply also had brought down the price in the past. Now the supply shortage, approximately, I'm just giving, I can't give you absolute number, but approximately we could have an impact of around 100,000 metric tons in the whole country, which was producing more than 700 to 750,000 metric tons.
Okay. I'll come in a queue. Thank you.
Yeah.
Thank you. Anyone who would like to ask a question may press star and 1. The next question is from the line of Manav Vijay from SL Mutual Fund. Please go ahead.
Yes. So thank you for the opportunity. Just want to ask you a couple of questions. First of all, so on a quarter-to-quarter basis, whereas sales have declined by around 24%. So for the sales decline, was uniform across all the 3 months, or there was any sharp contraction that happened in any one particular month?
Good question. That sharp contraction would happen in January, typically, because as you know, the holiday time is a time when the sales don't, they don't take place in its normal course. So typically, up till the second week or third week of January, of course, the buyers also, the customers also wouldn't be taking their positions which they usually do, because they will be coming back from their holidays, and then they'll take the account of the situation, and accordingly they'll be planning up their business for the next year, for that year. So typically the first month of the calendar year would have an impact, because it's only around the almost like the second week and third week where most of the customers will be coming back into the market.
Okay, so as per you, the second month and the third month were actually normal. It is mostly the impact of actually the first month, because of which sales decline is actually so sharp.
Sorry, I said, it's mostly, the major impact. Your question was which month was having the major impact?
January.
Yeah, that was January, correct. The first month of the calendar year.
Okay, but sir, in quarter 3, when we actually conducted the call, and the call was conducted on actually 14th of February, so in response to a question as to how quarter 4 will pan out versus quarter 3, you had mentioned that on a quarter-on-quarter basis, we should certainly have an increase in sales. Now, when January month...
I said it was flattish. We said it was going to be flattish for the year. We are not expecting a significant increase. We can just check, because we gave more of that it would be flattish, or we never said that it was going to increase actually.
So you have mentioned that it would be either flattish or there could be a slight increase in sales on a quarter-on-quarter basis. Now, when January was bad and Feb months were actually normal, then I just want to understand that on what assumptions that kind of a guidance was given.
See, we still did have, I think you also remember the last Concall which you are referring to, that we have also given the input, which is still continuing, that we had our pending orders of the earlier, of the past, which were still meant to be executed. And because of the mismatch in the sizes of the supply, we could not execute them. If you remember, that was also being referred to since Q2 almost, since Q2 Concall.
Correct.
That has been continuing. Yeah. In fact, that was based on that information, and we expected things to be improving. But unfortunately, it got stretched further. And by the time we were executing our existing orders, because there was a mismatch of the sizes earlier, and finally when the sizes were coming, that also didn't come as per our expectations. So when we have told that it is going to be flattish, typically for the last quarter, that was more on the basis of that we will be at least maintaining. Unfortunately, our sales also, which have percolated post-holiday sales, were not matching to the sizes which we were having. So that is the reason we couldn't actually execute the sales in the same manner as planned. Even now we have the pending contracts which we are not able to execute as planned because of the mismatch in sizes. However, now we are aligning our sales in relation to the supply. And thanks to the reduction in supply this year, that we are also seeing a good improvement in the overall pricing.
Okay. So second question from me. So you have sold approximately 13,000 tons this year. So last year you had given a guidance of around 1,400 crore sales happening in FY20. Now, so the expansion is delayed, so I don't think that number is happening. So if you can give as to what kind of volumes you believe are doable in FY20, and 687 to be precise was your average realization in FY19, what number is possible in FY20?
Good question. With regard to the volumes, we have, of course, are gearing up for our new capacity addition, the major capacity addition of 20,000 metric tons. Naturally, when we have given a guidance in the early part of last financial year, where we said that we look forward for in FY20 of around 1,400 crores of top line. We have, of course, have not anticipated that a significant amount of farmers not going for stocking and the supply getting affected. That was one part. And also we expected that we would be able to complete our works with regard to our capacity expansion also within the time. Unfortunately, the civil works for certain areas which got affected, they are all being completed now. They are being done on war footing at this point because all the equipments are pretty much installed and everything is done. So because of that, there was a delay with regard to the project. That is the capacity expansion being shifted to, the effect of capacity expansion being shifted to second quarter of the current financial year. With regard to the volume, of course, we are looking at optimum utilization. We are still continuing to look forward to utilize that 70% which we had planned. We still are keeping our bets on the second crop, where we expect now the farmers to go, even on a conservative basis, they are planning their stocking because all of them have dried up their funds. So we are really looking forward for a supply to be improvising because it is much lesser than, significantly lesser than what it was 2 years ago. So based on the supply, we look forward to utilize our capacity. And with regard to the value, the unit value which you have mentioned per kg, yes, it was 687 rupees per kg. Now, that was, of course, based on an average exchange rate of 69.70 because it went all the way, it also depreciated to 73, 74. So, keeping aside the exchange rate, in dollar terms, we are going to see an improvement in our unit value realization, which was around $8.6 per kg of last financial year. We are looking forward to, definitely it will be higher than that. So we can look forward for higher. I will not comment much on the rupee value realization per kg. But on the dollar terms, of course, more because of the value added, the ready to eat and the value added products, even in the ready to cook. And also the overall general price correction which is happening on the upward, in the upward direction in the present scenario in the market. We look forward for higher dollar earnings per kg on a unit value basis. For rupee, I may not be able to comment because it has also got to do with the currency fluctuations which you are also aware.
So in terms of dollar, is it possible to have, let's say with all the value added stuff, close to 10% increase in dollar terms and leave aside the INR fluctuation?
Minimum. That's a minimum.
Okay.
Minimum with all these factors combined, that is a minimum of 10% or $8.6 will definitely look forward to, for sure. Yeah.
Okay. And sir, so last year, FY19, you had around 16,000 tons of capacity. You produced 13,000. You will have 20,000 more tons of capacity this year. So the lease capacity might go as and when it will go. So this 13,000 tons, can you do around 20 or 25,000 tons in FY20, depending upon, let's say, the visibility that you have from your customers?
Good question. On the customer side, we do not really have issue on the visibility of the sales point because now we are also having the ready-to-eat products, I mean the value-added in the cooked format also, which are being a new addition to us, which is a major USP for us going forward. But on the supply, our company is not in a position to immediately say how the supply is going to come. We are, of course, definitely keeping our on a good second crop output, which definitely will, we are looking forward for that output, not just in the state of Andhra Pradesh, but also the other states, producing states in India. And yeah, I mean, if we get the output, definitely we should be able to do that. And as far as the sales is answered, because of the sales is anyway, we have markets now because we are also adding the additional ready-to-eat line also. So definitely on the sales front, there is no issue. Now this year we are keeping our fingers crossed more on the supply side.
Okay. So I want a clarity on the capex side. So 90 crores is what you have spent on the new facility. And the two hatcheries that also now are operational, so you have spent 27 crores on them. Am I correct?
Yes. Yeah. The shrimp hatcheries were constructed. They were constructed within the last financial year itself. It was already done. Yeah, they completed.
So that means I would say in last 12 to 15 or maybe 18 months, roughly 170 or 120 crores of capex has been done.
But why you can the processing is a separate part and the hatcheries are a separate part, right?
Correct. So now, what is the guidance for FY20?
For capex.
Correct.
For capex, we in FY20 we don't. We may have approximately another 15 to 20 crores max because whether it is any sort of enhancement on a marginal basis within for the existing processing project, or we look at additional pre-processing facilities, which it will be maximum 15 to 20, not more than that, 15 to 20 crores.
Okay. So now we have 5 hatcheries in total, and you mentioned that these hatcheries have the capacity of 1.2 to 1.4 billion SPF seeds. Correct me if I'm wrong. Now, these 5 hatcheries are good enough for the total requirement of seeds that you have.
Mr. Manan, first and foremost point, the company's hatcheries today are not only catering to the company's farms, but they are also catering to company's farmers also. So the hatcheries are for captive consumption, of course, the significant part, but also they are also going to take care of farmers' requirements, whereby we can plan programs with them with regard to the sizes which we need, which we have faced a very big trouble in the year FY19 with regard to size mismatch. So we are planning to utilize these hatcheries, this enhanced total capacity of 1.2 to 1.4 billion approximately, even to outside farmers also. So we'll be doing an arrangement with them where we give them quality seed and we buy quality shrimp in the sizes which we need from them.
Okay, sure. FY18, we had approximately 1,800 acres of own farmland. What was the number at the end of FY19, sir?
It is remaining the same. We have marginally reduced by around 50 to 70 acres, but it's approximately around the same. We are not increasing any further with regard to farming by the company at this point, but we are actually focusing on getting the produce produced for the company by supporting the farmers or the primary producers by means of supplying them quality seed and other inputs at the farm. Instead of the company getting directly involving itself, we are taking the support of the farmers by extending them support, of course.
Sure. FY18, we had a duty drawback of rupees 21.6 per kg, which in FY17 was 32 rupees. What was the similar rate for FY19?
Similar rate. It was similar. There was no change in the government policy in the duty drawback rate.
Okay. And is there any expectation for FY20 that it can alter or it should remain similar?
I would actually request you to pose that question on the 1st of June or 31st of May to the new government because we are not aware of what the government is planning. As you know, it's totally a government policy. We look forward to what the new policy will be for the government.
Sure. Just one last question from my side. Also the MEI's benefits that you had. So is it possible to quantify them as to you calculate them on a percentage of sales or per kg basis, how these benefits are calculated?
That's actually, it's a 7% of FOB value, but it varies because of the license sales is done based on the market demand and supply of the licenses. So hence it's always not exactly the percentile, it's not the percentage basis exactly as given by the government. So it also varies. So 7% of FOB value is that, and subsequently the market demand also puts it a little lower. So anyway, we can consider that we would be having around 7% of the FOB value, which will be lesser in the case of total sale value.
Okay, sir. Finally, two requests from my side. If let's say you're going forward in your PPT, if you can separately mention the export incentive that you earned and also the geography-wise sales breakup, that will really helpful, sir.
Your comments are noted, and we will ask our team to amend them for the next.
Okay, thank you and all the best, sir.
Thank you. A reminder to all the participants, if you wish to ask a question, please press star and 1. The next question is from the line of Dipesh Kashyap from Equirus Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So just continuing with the previous member's question, can you please quantify the export incentives in this particular quarter? How much was that?
The export incentive for this quarter was 1.13 crore.
1.13 crores, okay. 1.13 crores. So that looks very less. I think last year was 19 crores.
Sorry. No, sorry. I'm sorry. My mistake. I read it. It is 11.3 crores. I'm sorry.
11.3 crores, okay, right. Sir, and you also please quantify like what was the average procurement cost this particular quarter from the outside farm?
Yeah, 1 minute. From the outside farms, Dipesh, it was 307 rupees.
307 rupees. So the prices of the raw materials have actually come down, right? So that's why your gross margins actually improved. Is that the correct understanding? Because last quarter I think it was 330 rupees.
But Dipesh, of all the people, you are also aware that our average pricing is based on 10 different sizes spread over with a spread of 250 rupees to 300 rupees per kg.
Right.
So it also depends on the sizes which we are producing and selling at that point of time. At least, say for example, if we are not able to get the supply of the sizes which we have sold, we would still continue to make our product, continue to make our sales with the product which is available at least.
Okay.
And when we do that, naturally we have been doing more of the smaller sizes. Naturally, that is the reason the raw material cost also was lesser during the quarter. Because the small sizes have actually taken a toll on our, of course, on the realizations, of course, one part, then the other part is also the cost attributed to that.
Right. So, okay. So the next question is basically our sales have declined by 19%, but if I look at the Indian exports, that actually grew by, in the volume terms, grew by 9%. So why did we actually underperform the market?
Well, of course, the Indian volume is based on newer capacities, newer additions of capacities by various companies in general. And of course, we do not have the data for FY19 as of now, unless you have access to it. But as of now, we haven't yet received any data from the Government of India, from Marine Products Export Development Authority with regard to the actual growth. Or maybe so we don't have the data. But in general, this a country's production and its business is more dependent on various capacity expansions. In our case, of course, we did not have any significant capacity expansion in the past 2 years, as you noticed. And within the existing capacity itself, when we have had lack of supply of the sizes which were dear to us, and we had to opt for even smaller sizes, that when it not only affects the realization, but it also affects the productivity in general. It is like dealing with more number of pieces per hour when you go for smaller sizes, right? So that, of course, have had an impact on our business in general with regard to the volume drop of around 1,000 metric tons finished product, which you would have noticed for the full year last year. And this year, of course, we have continuing to perform as usual based on the availability of raw material. And now, of course, the main important point is we look forward for a more aggressive supply of the sizes which we need, at least from the second quarter, hopefully, because all the farmers are looking forward to stock again after they have dried their ponds, after them harvesting in the months of Feb, March, and April, all the smaller sizes. They are looking forward to restock again, waiting for the summers to seed a little bit.
Yes. No, I just want to understand, like one of our listed peers has shown 80% growth in the processing division. I understand they have a new plant and everything, but our capacity utilization has actually dropped from 80% in the last quarter to 70% this quarter. So was it any supply issue or any plant-specific issue that you saw in this quarter which may not get repeated next quarter?
Sorry, can you repeat the question?
I'm saying that one of our peers reported 80% growth in the processing division. I understand that they have a new capacity, but our capacity utilization actually dropped in this particular quarter. So was there any supply related issue that we faced, company specifically we faced that others were able to do well and we actually declined the utilization?
No, I think I've been repeating it, but I guess maybe it has not given out a clear answer. That the whole point of supply mismatch with regard to the sizes has actually impacted the company's utilization. When the sizes required for the orders which are there with the company are not available, there is a limit to what we can perform, because if we utilize that capacity for something new, and then even if the supply was there, we wouldn't be able to complete our orders. So the major issue was the supply related part. Of course, predominantly got to do with the mismatch in sizes. But in general, there was a supply issue. Now, of course, without any capacity expansions, any capacity enhancements, naturally we don't look at any major utilization because of the supply shortage. But now with the capacity expansion and also in a different scope of products, different portfolio altogether, I mean additional portfolio of ready to eat and cook products, even the value added, even in the ready to cook also, more seasoned products, we look forward for better business, better realizations, better margins.
Sure. So your new capacity, new plant will actually come on stream on end of Q1Q FY20, right? And when the commercial operation will start? Another 2-3 months?
Yeah, it's actually the second quarter. We are actually looking for a soft finishing it before the end of this quarter. Right. There have been some civil works which got overstretched. Since most of the technical area is being completed and it's being ready for by this month end, we look forward to start trial next month, that is in July. Sorry, I'm sorry, I was considering we are in June. So we are looking forward to complete it before the end of June, before the end of this quarter, and we look forward for the trial in July. Because of the civil works areas which were non-technical but were the essentials for the factory to run, which they got delayed, which had an impact for us to actually start our factory within the stipulated time. So from the second quarter, sometime in July, August, we should look at, before the end of July, we should look forward for commercial production, and then onwards we should see the utilization based on the supply scenario, of course.
Yeah, sure. So any comments on the current run rate, like how this quarter is going, because the capacity increase will happen by the next quarter. So how the current utilization is going on in this particular quarter, because the supply side is still the same, right?
The supply with regard to the last quarter of last year and the first quarter of this year, it's been pretty much the same. It's
Right.
just that the sizes have changed. Last quarter of last year, we have had more small sizes, and now we are looking at medium sizes to get harvested in this quarter, more as we speak in the present month and next month. So, supply-wise, we would believe we will continue to utilize the same level. We are continuing to utilize the same level as last year, with no similar to first quarter of last year, similar manner. And I'm pretty sure once the new capacity comes into play from the second quarter, whenever it comes, of course, we will be notifying you officially about the commercial production starting, and from then we should look forward to.
So I'm asking this, Bill, because your first quarter of FY19, your utilization was 97%, which has dropped to 70% in 4Q. So I just want to understand whether 1Q FY20 will be on 4Q lines or the last year's 1Q lines. So do you think the utilization will actually improve in this quarter?
It is actually the first. See, I think by now it's established fact that irrelevant of how the Indian financial year actually is framed from April to March.
Right.
Supply, of course, is based on the weather conditions, the climate conditions, and the right time to stock, and also the availability of water resources. So, supply for the first quarter of every financial year is typically good.
Okay.
Generally good. So we can look forward to a very good utilization of the existing capacity, own and lease combined, similar to last year's Q1. That's how we are doing. We'll be around the same. It's nothing to be compared to the Q4 of last financial year, if that's what you're asking.
Understood. Thank you, sir. All the best.
Thank you. Thank you.
Thank you. The next question is from the line of Nimesh Shah, an individual investor. Please go ahead.
Thank you for the opportunity, sir. I just wanted to understand that by adding this new capacity, are we targeting any new market as such?
Yeah, Mr. Nimesh, we have actually started selling out of, other than the traditional markets of USA and Europe in the last financial year itself. Of course, it was not really worth mentioning because it was hardly 0.7% of other markets other than USA and Europe. But of course, it was not mentioned significantly. But we are working with the other markets already, even before the new capacity coming into play. So we look forward to utilizing those markets too. But significant business will still continue to be with USA. But overall, we look forward to, once the new capacity comes in and mainly the ready-to-eat capability comes into play, we really look forward to enhancement of business in Europe also. So, and China and South Korea, which we have mentioned in our last Concall, we did have certain business with China, which was, as I mentioned, less than 1% in the last quarter of last year. We'll continue to explore other markets too, to take care of the capacity utilization. But major capacity utilization will still be happening to the US market because as such, USA is the largest consumer of the shrimp in the type of products which we are looking forward to do business with. So definitely it will have a major role in our business. But however, we are looking to diversify more into other markets too. Yeah.
Okay, sure, sir. Sir, regarding a new plant, what's the bifurcation of ready-to-eat and ready-to-cook in terms of capacities?
The ready-to-eat was 10,000, around 9,000 metric tons. I think the ready-to-cook was 21,000 metric tons. So it's a total of 30,000 metric ton capacity all put together.
And what kind of utilizations are we looking for our first year?
So sorry,
what level of utilization?
No, one minute. I actually mixed up with the total capacity. The new capacity is 20,000 metric tons. capacity, in which 5,000 metric tons will be ready to eat, which is cooked, and 15,000 metric tons will be ready to cook. I'm sorry on that because I mixed up with the total capacity of the company once the new capacity comes into play. Yeah, please go ahead. You were asking me about.
Yeah, what level of utilization you are looking for in our first year?
As of as of last year, we thought we would be able to utilize an optimum of 70% for the full year. But however, as we have noticed, one is the delay part which had happened in the first quarter because of certain civil works not being completed, and also the supply, which is the major factor this year, which has been the factor, of course, every year. So we need to really see how the supply will pan out in the next 2 to 3 quarters, because that is the key part for us to have a significant growth in business. But with we were originally projecting it to be around 70% of the total capacity utilization. So we should see how it goes up, subject to the supply conditions. It's all dependent on the supply. I'll be very straightforward with you.
Yeah, so my next question was the supply side. So what kind of season we are looking forward as second crop? So whether it will be medium size, large, the bigger sizes or the small one again? How's it? So basically what's the deficit in the market?
See, there have been multiple factors for the supply to get impacted. One is the price at which the commensurate price was not available for the primary producer or the farmer to look at restocking, or rather taking a delayed decision of stocking, and also the issues related to certain syndromes which were there at the farm level, which were impacting the productivity or the growth of the shrimp as such. So these different, because naturally when the growth gets affected, the cost also gets escalated. So the cost also gets affected. So these factors were the reason where the primary producers across the country have been constrained in the way they were doing farming. So they have going on a lower scale this year. As I mentioned to one of the callers earlier, we in general expect a minimum drop of at least 100,000 metric tons in the current year, minimum. So that is that's in the country as a whole. So, but again, now the farmers are looking forward to stock. They are waiting for the summers to cease. The summer because it's very hot, and as they stock in a conservative manner, unlike the past, we look forward for a good productivity out of their farms, and we can expect them to go for another crop too before the end of this year. So maybe because the first crop have had an issue, they may go for second and third crop, subject to how the crop results come out.
Okay, so next question is on the China consumption story. So recently I was reading some articles stating that China would surpass the US and would be the major market. So are we seeing any traction on that side?
Yeah, the China market, of course, it definitely is. If you remember my statement where we have mentioned that USA is the largest consumer of shrimp in the format or the products which we are targeting to produce. Definitely, yes, China is a bigger consumer than the USA, but however, it's mostly commoditized product, and China by itself also has a significant domestic aquaculture which is taking care of its interests. So it is only the deficit of Chinese domestic production which is mostly being imported into China. So had Chinese domestic production been going good, they would be more dependent on their own domestic product than actually looking for importing of products from outside, from other countries. But otherwise, yes, China is definitely a big consumer of shrimp, bigger than USA for its population which is there. But the format in which our company has been targeting, that is mainly the value-added products, we don't see much of potential there, and we'll continue to explore other markets like USA and Europe and
other North American and South American countries too, mainly for the products which we are targeting to produce.
Okay. Thank you, sir. That's it from my side. All the best for the future.
Thank you.
Thank you. The next question is from the line of Manav Vijay from SL Mutual Fund. Please go ahead.
Yeah, so thank you for your worry once again. I just have one question. What is the policy on hedging that we follow?
Typically, we used to have the hedging is on the sales realization. I guess this question is related to is it
Forex.
related to sales? Forex.
Yeah.
So we have hedged the company usually hedges its, covers its forex risks of the forward to the extent of 50% maximum. Usually it hovers between 30 to 50%. However, if you look at it, when depreciating rupee scenario, such hedging proves to be a disadvantage. In an appreciating rupee scenario, definitely the hedging does play a positive role. However, in a depreciating rupee scenario, the forward contracts typically, which we actually cover our forex risks by forward contracts for our sales primarily, only for our sales, which is, however, when you see rupee depreciating from 65, 66 rupees to 73, 74 rupees, it's a significant volatility, which, the business also can't exactly gauge all the time. So we did have around, I think it was approximately 35% of last year. Previous year, we almost had 50%. But in a depreciating scenario, we actually pulled back from covering any forward risks because it was only depreciating scenario is more advantageous to the company without covering any forward risks. So that is the scenario. Last year, it was lesser by around 30-35%. But earlier years, it was much higher.
So let's say today when we are actually standing in a quarter one, so for how many quarters or let's say months of sale are we covered on the forex side? Because foreign currency movement is something that is very, very difficult for anybody to have a correct prediction. We as businessmen, we as entrepreneurs should be concentrating more on the business rather than the forex speculation, which has no meaning.
Exactly. But as you know, in our case, in our industry's case also, in general, if you see, with regard to our company, first I'll answer to your first question, which is typically we cover up to 6 months. Typically, okay, not the entire business. That's where I said we are only covered by 35%. So it's part of the business is covered. We still leave part of it for the spot market pricing. Now, as you had rightly mentioned, the focus is not really on hedging or too much of focus is not on that. And as our industry also goes by, it is based on the realization per kg in INR, dependent on the foreign exchange fluctuations, where the market conditions also prevail. Like how today, if we have to pay an X price to the farmer, it is based on the realization of the overseas price. So even though a $10 can be 650 rupees or 720 rupees, right? So it is dependent on those factors, which also has its relative impact on the, apart from the overall supply demand scenario, overseas demand, their unit value per kg, how many dollars per kg. Apart from that, even the INR realization has an impact on the pricing what we can pay to the primary producers. So the situation is such that we have covered approximately around 35% of our last year's total, but we take a maximum exposure of max 6 months. We don't look forward to cover more than that. But that also was primarily, we have reduced our exposure because of the depreciating rupee.
Okay. So just one last question from my side is that last year, let's say if I exclude the other income, our sales was down by around 12%. whereas our inventory is actually up by 5%. I'm actually talking on a point-to-point basis from FY18 to FY19. So just wanted to understand that that what happened on the inventory side, why inventory should move up when our sales was down and we were constrained on the supply side.
First thing, other income is, of course, foreign exchange difference. Our other income, of course, here is our foreign exchange difference. Just in case, I just need to mention that to you. It is nothing but majority, 95% of it, of our other income is our forex difference, which is in our sales. Because of the accounting standards, we mention it separately. Now, getting to your question, so it is inclusive. So when you look at it, it is part and parcel of our realization. Our other income is part and parcel of our realization of our export business. Now, when it comes to the inventory, you have just asked about the increase in inventory when compared to last. Is that what you have mentioned? Sorry.
So my question is very simple, sir, that our sales declined in FY19 versus FY18, whereas inventory moved up and we were in a situation where the supply was constrained, because of which you could not actually do the required sales that you wanted to do. So why inventory should move up in that scenario?
Inventory did not move up. It was not the inventory. Changes in inventory is not just our finished product inventory. It also has got to do with our farm working capital in progress and the hatchery output. Those are all in that. In fact, our inventory is lesser. Our raw material costs have come down because of our utilization of our finished product inventories which were there with us. Had that not been the scenario, our raw material cost would be much higher. So we have actually utilized our inventory compared to last year, compared to the previous year. We have utilized our own inventory which was there, which was part of the finished product stocks. We have utilized it. So that, of course, what numbers we are seeing is, it includes even the farm working capital in progress and the hatchery working capital in progress.
Sure. Okay, sir. Thank you. Thank you very much.
Yes, thank you.
Thank you. Anyone who would like to ask a question may press star and 1. The next question is from the line of Parthiv Swami, an individual investor. Please go ahead.
Hi, good evening. I just wanted some clarity on the revenue guidance for FY20. I apologize if it's been answered, but if you can please clarify, sir.
Sorry. First thing, I think we have clarified already that we are looking at optimum utilization of our capacities by volume terms. Now, with regard to revenue guidance, I have also mentioned to one of the earlier callers that yes, last year we have actually given a guidance for FY20. However, considering this year's supply scenario, we are not exactly able to give a guidance with regard to the value terms. Yes, we look forward to utilize our capacities, even the new capacity which is being established in the ready-to-eat, which is of course the value-added product, which basically means it's of an enhanced unit value realization. So we look forward to utilize them optimally. Thereby, that would dictate how the revenue side would play out. But as mentioned, this has all got to do more with supply. And this year, we may see some constraints in supply in general, but that also is going to enhance the unit value realization in general, because of the lesser the supply, the more the demand would be, that the demand-supply equation will be balanced. So as such, we are only giving guidance for now about optimum utilization of our capacities for the current year. We are not giving immediately at this point for the current financial year FY20, we are not giving any guidance on the value side with any absolute number. Please don't mind.
All right, sir. Thank you. Thanks a lot.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Subramania Chaudhary for closing comments.
Yeah. Thank you everybody for attending our Concall on the Q4 FY19 results, and as well as the annual results of the FY19. For any further queries, you may please contact IR at apexfrozenfoods.com, and we look forward to speaking in the future. Thank you very much.
Thank you.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.